1.5 million euros. For most Germans, that number feels like something from another life, a figure you might see discussed on a finance podcast, never something you expect to see in your own depot. But for a growing number of disciplined savers and investors in Germany, this is real life. And what that life actually looks like might surprise you. Today, we're pulling back the curtain. What does it actually feel like to retire with a 1.5 million euro investment portfolio in Germany? What does your daily life look like? How much can you actually spend? And here's the big question. Is 1.5 million euros even enough anymore? First, let's anchor ourselves with some hard numbers. The average monthly pension payment in Germany for men in Western states currently sits around 1,543 euros, and for women it's closer to 1,037 euros, a gap that reflects decades of part-time work and caregiving interruptions. So if you've built a 1.5 million euro portfolio on top of your gesetzliche Rentenversicherung contributions, you are not just ahead of the curve. You are playing an entirely different game. But here's the thing. Having 1.5 million euros doesn't automatically make you wealthy. It gives you options. And in retirement, options are the real currency. So what does 1.5 million euros actually deliver in Germany today? If you follow the widely used 4% rule, withdraw 4% of your portfolio in year one and adjust for inflation each year after, you're looking at 60,000 euros per year from your portfolio alone. That's 5,000 euros per month. Now add your earned gesetzliche Rente. Let's call it a modest 1,200 euros per month for someone with a solid contribution history, and your total gross monthly income sits at around 6,200 euros. After accounting for Abgeltungsteuer on investment income and your Krankenversicherungsbeitrag, your actual net cash in hand lands somewhere between 4,800 euros and 5,400 euros per month. That is comfortably above what the DGFE benchmarks as a dignified retirement for a couple, around 3,100 euro net per month. And here's the critical difference from many other countries. In Germany, your public pension entitlement is based entirely on your contribution history, not your private wealth. Unlike means-tested systems elsewhere, nobody takes your gesetzliche Rente away because you saved well. That 1,200 euros a month arrives regardless of what's in your depot. So what does daily life actually look like on roughly 5,000 euros to 5,400 euro net per month? The key assumption, as always, is that you own your home outright. If you're still carrying a 350,000 euro mortgage, the entire equation changes. But let's say the Eigenheim is paid off. That monthly income is pure lifestyle money. You wake up on a Tuesday with no alarm. You make your coffee slowly, maybe a proper Siebträger at home, maybe a walk to the local Bäckerei. You take your morning walk through the Stadtpark or along the riverbank. You check your portfolio not because you're anxious, but because it's become a genuine hobby. You watch dividends arrive from your globally diversified ETF, distributions from European equity funds, coupon payments from a small bond allocation. When markets dip, you don't panic, because you've already parked 2 years of living expenses in a Tagesgeldkonto at one of the direct banks, currently paying around 3% per year. That cash buffer is your psychological firewall. You eat well. You shop at the Wochenmarkt on Saturday mornings. Groceries, utilities, Krankenversicherung contributions. Whether you stay in the gesetzliche system as a free villages Mitglied or hold a private PKV policy, car insurance, household insurance, Grundsteuer, and the general cost of running a life. That runs around 22,000 euros to 26,000 euros per year. You travel, a long weekend in the Schwarzwald, a week on Rügen in summer, maybe a city break to Vienna or Lisbon. Every other year, something bigger, a river cruise on the Rhone, 2 weeks in Southeast Asia, or a slow rail journey through Scandinavia. Travel budget, 9,000 euros to 12,000 euros per year. Dining out, theater, concerts, museum memberships, hobbies, gifts, another 7,000 euros to 9,000 euros. At the end of the year, you've lived well and still have money left over. That is the reality. It is not a first class everywhere, Porsche in the driveway lifestyle. It is something arguably better, a comfortable, unhurried, genuinely free life on your own terms. But let's talk about the risks, because this is not a fairy tale. The biggest threat to a 1.5 million euro retirement portfolio is sequence of returns risk. If markets fall sharply in the first 2 or 3 years of your retirement while you're drawing down, the portfolio can take a structural hit it never fully recovers from. This is exactly why the 2-year cash buffer is non-negotiable. Inflation is the other quiet danger. German inflation peaked above 8% in 2022 and has since moderated to around 2.2% in early 2026, according to Destatus. But even at 2.5% annually, purchasing power erodes significantly over a 25 to 30-year retirement. That €60,000 today could feel like €38,000 in real terms by year 20. Your portfolio needs meaningful exposure to growth assets, German and global equities, not just Bundesanleihen and Festgeld. Then there's the healthcare dimension. Germany's system is exceptional, but as you age, out-of-pocket costs for Zahnersatz, specialist referrals, optical, and eventually Pflegebedarf can escalate. The ongoing Pflegeversicherung reform is worth monitoring closely, as future contribution rates and benefit thresholds are both in motion. Here's something most people overlook entirely. How you structure €1.5 million matters just as much as having it. The split between assets inside a RUR-up contract, holdings in a regular brokerage depot, real estate equity, and liquid cash reserves all carry different tax consequences, access rules, and longevity implications. Getting the architecture right, ideally with a fee-only honorarburator, not a commission-driven bank advisor, can be worth tens of thousands of euros over a retirement horizon without you spending a single extra euro of capital. Too many people focus entirely on reaching the number and then ignore the engineering underneath it. That is a costly oversight. And finally, the emotional dimension, the part the spreadsheets never capture. Many German retirees describe something unexpected in the early months after leaving work, a quiet disorientation. When your identity has been tied to Beruf for 35 or 40 years, when the rhythm of the working week has structured your entire existence, its sudden absence can feel unsettling. €1.5 million solves the financial equation completely. It does not automatically solve the purpose equation. The retirees who genuinely thrive, who look back at 80 and say it was exactly right, are the ones who build a life outside of work before they left it. Animate, mentoring, deep hobbies that challenge the mind, close community. The money simply gives them the freedom to pursue all of that without financial anxiety. And that combination, Sicherheit plus Shin, security plus meaning, is where the real richness lies. So is €1.5 million enough to retire in Germany in 2026? For most people, in most parts of the country, the honest answer is yes, comfortably. Combined with even a modest gesetzlich Rente, it puts your total retirement income well above every standard benchmark for a dignified, comfortable life. But enough is always personal. It depends on your lifestyle expectations, your health, whether you live in Munich or Magdeburg, and how long you live. Someone in central Munich with expensive tastes and no public pension might feel stretched. Someone in the Eifel with a paid-off home and simple pleasures would likely feel genuinely wealthy. The real takeaway is this: €1.5 million doesn't just buy you a retirement. It buys you the freedom to decide what your retirement actually looks like. And that freedom, that genuine unabhängigkeit, is worth more than any number on a screen. If this video gave you something to think about, subscribe to the channel and hit the notification bell. Every smart financial decision you make today compounds, not just in euros, but in the quality of the life you'll eventually live. Thanks for watching, and I'll see you in the next one.